Joining me live is Tim McIntyre, News Corp Real Estate Content Director. Tim, thank you so much for joining us and happy Father's Day to you. Thanks for taking some time out to chat about this index and give us an example of what's happening here.
Yeah, no worries, Janie. It's a good day for fathers, but not a great day for those looking to buy homes, unfortunately. The new Housing Affordability Index from PropTrack has revealed that now is the worst time as far as data has ever been measured as to for those looking to get into the market. So the way they're looking at that is that 50% of people of household income can actually only afford 13% of homes. And in order to consider the market to be affordable, you need 50% to be able to afford 50% of the homes sold over the previous year, which last happened in about 1999. So it's been a tough couple of decades since then.
All right, so it's certainly, by the sounds of it, pretty clear that we're looking at some of the worst times in 30 years, as you mentioned, but that old theory of things were easier back then or now, certainly in the spotlight.
Yeah, that's right. So, there's always the argument between boomers and millennials and zoomers about who had it the hardest. And we know that back in about 1990, repayment rates were up to about 17.5% interest on properties. And but of course, back then the properties were a little bit cheaper and you had high savings rates in order to save a deposit as well. Basically, the equivalent to today would be if housing interest rates were about 7%. And we're just about there right now. As far as repayments go, the deposit hurdle, which is getting into the market, is much, much harder now than it ever has been.
Housing supply is an issue, as we know. What other issues are impacting this decision?
Well, housing supply is the main issue. Supply and demand is the driver behind any sort of economic measure. And there's not enough housing in Australia. There's not enough being built. There's too much red tape. Developers aren't able to get the starts they need. They're not able to get the investors they need. A lot of construction companies are going bust. It seems like one's going out of business every week. And on top of that, we're already far behind where we need to be, but now we've opened the doors and there's going to be 400,000 or 500,000 migrants coming into Australia the next couple of years, which are going to put more pressure on the market, and we're going to have less than we have now, and we're going to need more and more again.
What's happening overseas in regards to home ownership? Are we seeing numbers decline, increase?
Look, property markets are pretty different overseas. If you look at a place like the USA, for example, if you default on a mortgage, the bank can only repossess your home. So if people can't pay something off, they just desert their house. They often have 30-year mortgages with fixed interest rates. So the people at the moment who are trying to buy property in the USA are now getting sort of finding it harder because of the higher rates. But everyone who's already paying one off is just paying the same thing off they've been paying since whenever they took out their mortgage. And if you look at places like Europe, they have a far different relationship with property than in Australia. Renting is far more normalised. You can rent long term. You can pass the leases on to your children in some areas. You can renovate the properties, essentially treat them just like they're your own, but you're paying a rent instead of a mortgage. So the Australian dream has always been the house and the yard and the kids and living in the suburbs and all the cliches you can think of. But it's having to evolve for a lot of people at the moment. A lot more people need to live in apartments to be able to work remotely if they can. Not everybody can, of course. We've got a story out today about the high numbers of emergency workers being priced out of the market. And it's just so hard to get in. We've got another story out today as well, that 70% of people are getting financial help from their parents now. They call the bank of mum and dad, which has been doing it tough the last few years, exposed to a lot of risk. And basically, they're having to fork out more money than ever before to help their kids get into the market.
So, Tim, what other investments can be looked at for those unable to purchase a home?
Well, at the moment, there's great returns are starting to come back into cash products, term deposits and savings. You're actually, a couple of years ago, you're getting 0.5% return on the best sort of products in the market, but now you're looking at closer to 5.5%, 6%. So you can get money there. But the stock market's another option, obviously. But when we talk about property, properties are affordable in some other parts of Australia than where you might live. For example, the Perth market, you can still get 2-bedroom units for under $250,000 at the moment. So, that's a major city, and it's not as speculative as buying in mining towns or things like that. But there are areas where a more affordable investment property could be a way to, make some equity, sort of double the value of your properties a lot quicker, maybe come up with a deposit later on when you sell. And in the meantime, a tenant, because the tenancy market's very tight at the moment, will be paying that mortgage off for you. So, if you can handle a bit of research and a bit of risk and whatnot, there are other ways to build wealth in Australia. And we think it's very important that people don't lose sight of that, just because they can't get the house where they want to live and the big mortgage straight away. You got to look at other ways to provide for your future.
Certainly do, by the sounds of it. And yes, a good read, the editorial series entitled Saving the Great Australian Dream, but not the great statistics there. But as you said, there's certainly some other ways that people can look at potentially purchasing a home, again, whether it's in where you want it to be or not.
Yeah, and we need to put pressure on government to keep coming up with more supply. However they do it, supply is the one thing that will make property more affordable. You don't want to rely on all these people defaulting on their mortgages with high interest rates just to create more supply. If we're going to bring more people into the country to pay tax and keep us out of recession and whatever else they need to do for the economy, they need to be able to live somewhere. They need to be able to afford to live, and the people who already live here need to be able to live somewhere as well.
Yep, good point. Tim McIntyre, News Corp Real Estate Content Director. Thank you so much, and enjoy the rest of your Father's Day.
Thanks, Janie. Pleasure.